please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Bazaar Morning Call. I am Anuj and with me Surabhi and Sonia in the studios. Today is going to be an interesting day because we have weekly options expiry on the Bank Nifty and the market for last 2 days have been showing some bit of weakness now that the Karnataka election outcome is out of the way. Good morning, both of you.
Hi, good morning, Anuj. Good morning, Surabhi. It seems like the sell in May and go away theory is finally working out, right? I mean, look at the global cues. They are looking pretty scary at this point in time. Brent is higher, the 10-year yield has moved up, and all of this, of course, has ramifications for our own market. But Anuj, do you get a sense that the selling pressure for our own markets could continue? Because we did see quite a bit of delivery-based selling as well in some of the large cap names, whether it was names like ICICI Bank, Reliance Industries. The pressure could continue, you guess? Well,
Sonia, you know, 2 or 3 points. For last many days now, I've been pointing out the market breadth and the number of stocks hitting 52-week low and 52-week high. I think that is one internal that market should respect. And you know, when indices make highs and portfolios bleed, something is wrong with the market. And that number increasingly, just look at that. 14th May it was 67 versus 265. 15th May it was 62 versus 279. Yesterday, 48 stocks hit new 52-week high, 313 stocks. 313 is a big number of stocks hitting 52-week low. You're talking about almost 20% of the market being at 52-week low. So the broader market is in pain and has been for some time. There was this Karnataka election which was holding up the market. The global cues, macro cues were a bit weak. And now the texture of the market, once that event is out, you know, you have to give a lot of importance to that intraday reversal on good news. Intraday reversal on good news normally signify a near-term top. So my base case still remains that the 10,930 mark, the recent high, is a significant top for the market. If it's taken out, well, you know, I'll accept that. Perhaps my, you know, thesis was wrong and the market could hit new high. But for now, 10,930 is significant top. Now, Bank Nifty's weekly options expiry today. Normally, you don't see a big move in Bank Nifty on expiry day. It's just meandering around certain levels. This time, it could be different because over the last 2 days, you've seen a 700, 800 point on the Bank Nifty. It's been a trending lower move on the Bank Nifty. Yesterday's low, 26,100. If it breaks that, you can have another 200-point decline on the Bank Nifty. So you'll have to see, you know, it's a sell on rally market. So you don't have to, you know, sell, say, declines. You have to wait for intraday pullbacks. Just like you saw yesterday, there was one pullback and that was sold into. And the FIs are still net long on this market and still 2 weeks to go. Yesterday, we saw some unwinding. My sense is that we are in for really tough 2 weeks, at least for this series.
Okay, well, good morning, Anuj. Good morning, Sonia. Sonia, I take your point on crude completely. Just that I was looking back at historical data, you know, when we had the 143 top and then we had a 113 top on Brent. In some cases in 2010-11, the market marched on, but I guess the immediate interim volatility is what everybody is going to worry about. So, Anuj, you know, back to where that leaves us as of now, and you said the next 2 weeks, if the texture and the nature of this market has changed to a sell-on rally, what's the advice then to, you know, retail portfolio investors?
Yeah, you know, on that, one thing which I want to tell, you know, everyone is that right now you should not dabble into the small caps and SME stocks. That is one area where my sense is you're already seen that a lot of a lot of portfolios are bleeding, and there's no exit in some of these stocks when they start to fall. It all looks good when they're rising, right? Last year spoiled a lot of people. Last year was a mid cap and small cap party. Last year, you know, you could buy a stock, it would double, and you would think that, you know, you made a great investment.
But everybody made money last year.
44% index rally in mid-cap index. So this year is going to be a year of large caps, if at all of equity year. You need to put money in large caps this year and you know, have a bit of a safety. I think that this year's basic theme is going to be capital protection. Last year was you know, generation of alpha. This year is going to be, you know, perhaps protecting your capital.
Okay, so stick to large caps and perhaps stay away from mid caps. By the way, we must talk about crude more importantly because Brent, there is an upgrade on the forecast of Brent crude. Morgan Stanley has raised their forecast to $90 a barrel by 2020, and they say that there are new international shipping regulations which will take effect, because of which there could be a big surge in demand, and that could, you know, cause crude prices to move up further. So we'll talk about that, but for now, let's also tell you what our wise experts have to say as we head into trade this Thursday morning. Sanjeev Prasad of Kotak Institutional Equities says a 6-month hiatus in India's hectic election schedule will focus the minds of market participants on India's weak macros, the market's rich valuations, and on low scope of earnings upgrades before the election frenzy swamps the market in the first half of calendar year 19. He says they are somewhat confident of earnings recovery given the likely normalization of operating conditions in sectors such as banks, strong global commodity tailwinds for metal and oil and gas sectors, and rupee depreciation helping earnings of IT and pharmaceutical sectors. However, he highlights India's worsening macro reflected in rising bond yields, which is quite discomforting when market and consumption stocks are trading at high valuations.
Okay, let's get you some money market views as well. Tirthankar Patnaik of Mizuho Bank says that the INR has maintained its steady depreciating trend since the beginning of the fiscal amidst deteriorating domestic macro, rising dollar, rising global yields on ever-improving US data. He believes headwinds of little or no respite on domestic macro fundamentals and global environment are likely to persist for now, with continued political uncertainty in Karnataka adding to the volatility. He expects a range of 67.5 to 68.5. That's actually a big range.
Yes, that is. And on the bond, he says the bond yields have shown a similar downward trend this month, barring some relief from the OMO-related announcements. With the 10-year hardening from 7.7% levels, he expects some support from the open market operation today. This will be the first since May 2016 and last evening's political events, but continue to expect yields inching towards the 8% mark, with the near-term band likely to be 7 to 7.7 to 8%.
Okay, so plenty of concern around those soaring bond yields, both internationally and here in India. Speaking of international news, let's take a look at what's been making headlines and how markets are faring. Here's Nigel with the World View.
Well, the US markets, they ended more in the green in yesterday's trading session. A couple of stocks, though, that really took your breath away overnight. You had Macy's, they came out with their set of numbers and things look very, very good. In fact, that stock ended with a gain of more than 10%. And from the pharma space, Teva was up close to around 3% after Berkshire Hathaway. They said that they'd increase their holding in the company. So that as well did well. Bond yields, though, they continue to hold above that 3.05 odd mark. Even currently, it's at around 3.1% odd. Remember, that's the highest levels we have seen since 2011. And also keep an eye out on crude prices. As Sonia just told us, Morgan Stanley, they are talking, in fact, about Brent crude prices going all the way to around $90 per barrel by 2020. So that's not very, very good news for an emerging market like ours. European markets, they ended more or less mixed in yesterday's trading session. We had all the frontliners in the green, but the Italian index was the big underperformer. There is some uncertainty out there whether or not there's going to be an economic crisis breaking out over there. The right-wing party, though, they clarified no way not seeking any kind of debt write-off to the tune of around $250. But the Italian market was down. The bond yields as well did spike up out there. From the Asian markets, Nikkei is doing well. It's holding with a gain of around 0.4%. That's because the dollar yen now has moved to around 110.5 odd mark. Good news for an export-oriented economy. But other markets, they are struggling, all of them trading a bit in the red. In fact, some of them have come off the high point of the day. The SGX Nifty, though, is indicating a start as flat as can be. Back to you all.
Okay, Nigel, thanks a lot for that. We're going to take that point forward that you made about Morgan Stanley raising their Brent crude forecast. David Lennox joins in now. He's the analyst of Fat Profits. David, good morning. Morgan Stanley makes an interesting point in their note where they say that the international shipping regulations are going to change, so vessels will be forced to use lesser amount of sulfur fuels and depend more on oil. You think that's a plausible scenario? And do you also expect crude to move up to $90 a barrel?
Look, in terms of those regulations, look, at this point, we are suggesting that we're not going to see any significant change at this point. However, at any time in the future, and if you're looking at 2020, one would suggest that certainly they will be looked at, given the environment that we're seeing in terms of the use of carbon. Overall, at this point in time, we would be suggesting that perhaps, yes, we will certainly be seeing through 2019 a higher Brent price. However, in 2020, we would be thinking that perhaps domestic production inside the US will be continuing to put pressure on the WTI price. And of course, that will then flow back through to the Brent price. However, 2020 is a long way away still from where we are now. And I think the markets are having difficulty coming to grips with where it'll be at the end of this year, let alone in 2 years' time.
So let's get to that tough question, David. If we just talk about, the second half of this year, looking at demand supply, Do you think 90 is a possibility, or do you think somewhere we're probably close to the top of the current range?
Look, certainly for our Brent price, we had an end-of-year price, that's to 31 December, of $74 to $84. Now already we've traded up into, and we're only halfway basically through the year, traded up into our range already. We would be suggesting that going forward over the remainder of this year, as we move out of the drive season in the US and then back into the layover winter period towards the end of this year, that there will be pressure on the crude prices to come off. So at this point, we will be keeping our Brent price at between 74 to 84 by calendar's year end. So we're not looking for much further on the upside from here. And possibly if it does hit 90, it is not going to, we believe, stay there.
How is the situation as far as US inventories are concerned? Demand typically rises when the US inventory levels fall. What's your prognosis as of now?
Look, certainly if you have a look at the recent releases of domestic demand inside the US for gasoline, which is where it all starts. In fact, for the week just finished, we did see a small slip in usage. So that's a little bit concerning in terms of now that we are only a few weeks away from going into the summer period. So we are watching that very closely. We still are just a step above where we were at this point last year. So from that point of view, demand in the US is stronger. So we will be definitely looking for a stronger drive season inside the US. Anecdotal data would suggest to us that that's going to be the case. But the week on week, we are just seeing that little bit of a slip. So markets are a little concerned. However, we do think that it's going to be a good season, and that should, we believe, push the Brent price and WTI prices towards the end of the top end of our ranges.
Okay, that's true actually, David. You know, not everyone is forecasting a big surge in demand. I mean, the International Energy Agency has actually said that it's lowered its global oil demand forecast for the full year. While on the flip side, as we said, Morgan Stanley has raised it. So there's a lot of opinions coming in. Thanks so much for joining us and giving us your view. That's the word coming in from Fat Profits. You will definitely see higher crude prices next year. Well, let's take a short break. On that note, we'll come back with CNBC TV18's top 10 list of stocks to watch for the trading day. Stay with us.
I was really late for this meeting, so I took a shortcut through this park, when suddenly out pops this massive gorilla. I grab my bag and run. I thought I'd got away from him, but I hadn't. So I hold up my Carlton bag for protection. And then I remembered I had the perfect weapon. And so, it's just this dent.
No problem, sir.
Whatever your story, the Carlton Edge lifetime warranty takes care of your bag, including airline damage. No questions asked. Carlton.
Introducing Ford Freestyle, जोशीले engine के साथ. उनके लिए जो जीते हैं दिल से. Ford Freestyle, जोश है दिल में. Ford, कुछ अलग सी, family वाली feeling.
पेश है बर्जस सिल्क ग्लैमर क्रिस्टल रिफ्लेक्टिव टेक्नोलॉजी के साथ. दीवारें नहीं, यादें हैं.
Hi, as promised, we're going to talk about all the stocks in focus this morning. Of course, the SGX Nifty for now is flat, but we have seen quite a bit of pressure in our own markets lately. A lot of delivery-based selling in big banks, etc. But what are the stocks to watch today? Anuj, what are you looking at?
So one red, one green, Cipla on the way down, Sonia. Interesting, huge delivery selling in Cipla yesterday. I was looking at if there was some news. One thing is that while the pharma index is at 52-week low, Cipla is 17% above it. In some sense, when the outperforming stocks also start to fall, that's the process of bottom formation. But it could be interesting. So for today, I'll watch out for Cipla on the red. But it will be interesting to see where the pharma index bottoms out. On the way up, we were discussing this in closing bell yesterday. I think Hexaware is making a bit of a move again. It's reclaimed 80% of that brutal fall post numbers. Are the markets willing to give benefit of doubt to what the management said? and of course, it's reclaimed the 20-day moving average. After a big decline, if the stock doesn't halt at 20 DMA in the pullback, that's a very positive sign. So I'll want to see the follow-through in Hexaware today.
Okay, all right. Well, let's move to some of the other numbers as well. We've got Nigel joining in on Tata Steel. Two big steel earnings. Let's start with Tata Steel, Nigel. How do you dissect the numbers?
Well, Indian operations did very, very well, Surbi, while Europe as well as Southeast Asia were a bit of a disappointment. India, I say it's good because the sales volumes are lower. That was on expected lines because Kalinganagar was shut for some part of the quarter. But EBITDA per ton, closer towards 16,000 rupees on a per ton basis. That's at the upper end of what the street was working with. We were working with a number of around 15,000 to around 15,500 on a per ton basis. Europe, well, that was a bit of a disappointment, actually. Remember, we got ArcelorMittal's numbers last Friday itself, and they looked good. So the street was penciling a number in excess of around $75 to around $80 on a per ton basis. It actually came in closer towards $70 on a per ton basis. So that was a bit disappointing. And Southeast Asia as well, the EBITDA number did see a sharp contraction on a year-on-year basis, so that didn't look too good. Though going ahead, the management commentary is very, very positive, and Credit Suisse, they're maintaining the outperform rating over there. They say that the FY19 commentary is looking good, so that's why, in fact, they continue their positive stance.
Tata Steel, what about JSW Steel?
That was a blowout quarter, actually, Anuj. The numbers look very, very good. We hear most of the whispers. Yes, we heard the whisper that the numbers could be a tad bit better, but still these numbers look very, very good. The EBITDA per ton, closer towards 12,000 rupees on a per ton basis, phenomenal. You need to, adjust for some kind of tax benefits that they have got. If you take a look at the CST as well as VAT, but still, even if you adjust it for that, it's at around 11,000 rupees or around 10,800 rupees, and those numbers look very, very good. So good operational performance are there. They've been increasing their share of value-added products, and also they're focusing on optimizing their operational gains. So that look good. Besides that, they've reduced their debt, and that's why Credit Suisse, they have increased their target price. They've also increased their EPS estimates by nearly around 14%. The stock should open up in the green, though it's trading at fresh lifetime highs.
Okay, and they have huge capex expansion plans as well. They've guided for $7 billion worth of capex over the next 3 years versus about $4.5 billion earlier. But let's find out what happened with some of the NBFC companies. Muthoot Finance came out with numbers post-market hours. Abhishek, how did it look?
Well, Sonia, they have weak set of numbers either on the balance sheet front or on the P&L front. So loan growth continued to remain weak and in single digits over the last 4 quarters, and that momentum continued in the current quarter. Now, asset quality deteriorated as the company migrated to 90 days past due of recognition from 120 days past due of recognition. So gross NPA in absolute value increased by 28%, while gross NPA ratio increased to 7% versus 5.6% sequentially. However, gold financiers do not worry about the asset quality as they have gold as security. But net profit at 451 crore was down about 2.5% sequentially. So weak performance. Expect the stock to be in red today.
Okay, Abhishek, thanks a lot for that. TVS Motor, interesting. Yesterday, of course, Sonia was analyzing those numbers. Been a trend with TVS Motor. The market prices in 9%, 10%, and they deliver less than that.
Yes, and this time things are a bit different because the management themselves in the conference call has stayed away from giving any kind of guidance. Remember, for the last many quarters, they kept promising about double-digit guidance in margins. This time, they have not given any timeline. So this just shows that they themselves don't have clarity. I guess that's going to put further pressure on the stock. They expect raw material costs to harden further in the first half of FY19, which could put further pressure. They say that they've actually helped the dealers with better margins at their own cost to pump up the new projects, new products, which has impacted realizations as well. Now, most brokerages have scaled down their earnings estimates. Axis Capital says that there are a lot of cost pressures expected going forward because of the BS6 norms, because of the new safety norms. So margins could further be under pressure. But Credit Suisse says that the management refusing to give a guidance is the biggest negative for them.
This reminds me of this adage on the street, earnings missed estimates, earnings didn't miss estimates, estimates missed earnings. Always been the case.
Whichever way we cut it, let's see how the stock reacts, because as you're saying, the management surely wasn't inspiring too much confidence in that con call. Okay, let's move forward. Vivis Lab in focus. There is a US FDA inspection that took place, Ekta?
Yes, and positive outcome for Vivis Labs. Remember, they have 2 important units, Unit 1 and Unit 2. Unit 2 was the one which had its warning letter and import alert lifted. So hence, Unit 1 inspection was pending for a couple of years. It got re-inspected, got 0 observations from the US FDA, so good news for Vivis.
Okay, good news for Vivis. Can't say the same about Brigade, can we, Sona?
No, absolutely not. It was a weak performance on all parameters. The revenue went down by 22%, profits went down by around 81%. That was because they reported one-time expense with respect to demerger of around 11 crores. Also, the finance costs, they went up by around 26%, so did the depreciation. If we talk about realizations, they came in at 5,509 rupees per square feet, and that is lowest in last 8 quarters. Not only that, they saw some weakness even in the residential sales that went down around 2.5% on a YOY basis. Residential sales volume, they also went down by around 16% on a YOY basis. On the flip side, they did well in their commercial front. The commercial sales went to the highest level in last 6 quarters, but I expect a red on that stock today.
Okay, all right. Let's move on then. Look at some more numbers. Manglam, Z Media.
Well, mixed set of numbers, Surabhi, for Z Media, because 33% revenue growth is something that the street may have liked, given 22.9% of that growth came in from ad revenue, as well as 43% came in from a lesser contributor, which is subscription revenue. However, below the top line is where the problem started. The EBITDA, that one declined by about 42%. The margins came off by nearly 1,400 basis points, and that is because of higher other expenses, higher employee expenses, as well as higher operating expenses. As a result of this, the net profit declined by 76%. Now, one may take heart from the ad revenue growth, but remember, industry leaders Zee and Sun TV also reported similar, if not better, ad revenue growth with margin improvement. So I expect the stock to be under pressure. It has been underperforming from the start of this year.
Okay, thanks a lot for that. Well, there were some other smaller numbers that came out as well. Sonal will give us that list. Sonal?
Well, I have all the good numbers on my list today. I'll start with Nesco. Revenue went down by 2% because of some weakness in the Nesco IT park, but operating profit margins, so they expanded by 1,430 basis points, and profits also went up by 24%. TCI, good set of numbers. EBITDA went up by 53%. Even the operating profit margins, they expanded by 180 basis points. Expect green on that stock. Pratap Snacks, another good set of numbers. EBITDA went up by 60%. The operating profit margins, they also expanded by 130 basis points. However, profits were lower due to higher tax expenses. GMM Pfaudler, good set of numbers again. EBITDA growth of 33.6% and profit growth of around 15%. And we saw strong performance in the glass line equipment. However, heavy engineering segment, that dragged the performance a bit, but expect a green on that stock. Manali Petro, good numbers sequentially. Operating profit margins, they expanded by 390 basis points. Even the profits, they went up by 55%. Expect the stock to be in green today.
Okay, Sonal, thanks a lot for that. So that's, of course, some stocks to watch. But what about some other stocks in news? Anisha has that list.
Well, yes, Anuj, you touched upon Cipla. That will be in focus. Remember, the stock was down about 3%. Just to put the news into perspective, they have yesterday announced that there's a board meet on 22nd where they will consider issuing funds via equity or other means. So that is just one bit of news that I wanted to point out. Other than that, Transport Corp will be in focus because the board has given an in-principle approval to hive off their cold chain unit of the company. They've also increased the borrowing limit to 1,000. They have also 1,000 crores. And they've also looked to issue securities worth around 300 crores. Separately, they've also approved an acquisition of 100% stake in SCM Lock Focus India Limited. So that stock will be in focus. Moving on to Simplex Infrastructure, looks like a lot of fundraising is what is happening in the markets right now because the board has approved issue of equity securities via QIP and the floor price has been decided at 598. The current market price is around 600. Maybe we will see a bit of technical adjustment on that. Just a few numbers that I wanted to touch upon. Punjab and Sindh Bank, where the net losses as well as the gross NPA have worsened quarter on quarter. So that one will be in focus. Lastly, on Praj Industries, well, the revenue has come in line with Edelweiss estimate at around 274 crores, but the profit is much higher at 27 crores versus an estimate of around 21 crores, so that might see a green tick. Back to you.
Okay, long list of stocks. Thanks a lot, guys. In case you missed out on any of them, here's a quick recap. The stocks that are expected to gain today are names like Hexaware, Tata Steel, JSW Steel, Vivis Labs, Nesco, TCI Express, Pratap Snacks, GMM Pfaudler, IOL Chemicals, Transport Corp, Manali Petro and Praj Industries, while stocks that perhaps could be under pressure today, Cipla, Muthoot Finance, TVS Motor, Brigade Enterprises, Z Media, Simplex Infra and Punjab and Sindh Bank.
Okay, well, that's our list of stocks. More than 10 today, actually, because of so many earnings and news points. Speaking of news, let's now focus on the big national story that's playing out. High drama at the Supreme Court yesterday, a midnight hearing. And it seems that for now, at least, the swearing in of B.S. Yediyurappa might just go through. But then there are lots of twists in the tail. We've got Ashpreet joining in, who's been up all night tracking that action. Ashpreet, what's the latest?
Well, yes, the whole saga started about 10:30 p.m. in the night when the Congress decided that they will reach the CJI's or the Chief Justice residence and go ahead and approach and seek a stay on the swearing oath ceremony as far as today is concerned. Now, remember, the hearing started at 2 a.m. It has lasted for about over 3 hours, but the Supreme Court has refused to stay the oath-taking ceremony. However, there's a very clear order from the court here saying that everything or every development in Karnataka will happen subject to outcome of the case, which means that there can be changes in the case. There have been earlier instances where in Goa elections, even Arunachal Pradesh, president rule was imposed, then finally a decision was taken by the Supreme Court. So we'll have to wait and see what happens tomorrow at 10:30 when the matter will be taken up again. But from what I gather, as Utkarsh Anand, our colleague from CNN News 18, was explaining, what happened in the court is the first thing that Congress has been saying that stay the oath-taking oath ceremony because they are willing to form the government in alliance with JDS. And the second point being that the decision taken by the governor was arbitrary. However, Mukul Rohatgi, on account of BJP and B.S. Yediyurappa, said that a midnight hearing like this is unprecedented. It should not have been called because only if it is a matter of life or death, then such cases should be heard. But of course, he was saying that there is absolutely no urgency. It can be taken care of. And it is the single largest party which can form the government on governors and rights. So today, the action will be in Karnataka, but it remains to be seen what happens in court tomorrow. Back to you.
Okay, Ashpreet, thanks a lot for that, for staying up all night, for covering that bit by bit for us. One of the hardest fought battles for power in the recent times. But back to earnings then. JSW Steel has posted a strong quarter this time, as Nigel told you. He in fact caught up with Seshagiri Rao, the joint MD and group CFO, to discuss the outlook on the company and whether he would be able to maintain such strong earnings. Listen in.
Considering the robustness in the steel demand globally and also the discipline the Chinese are today exercising in moderating their exports, it is expected that the steel prices are range bound in future.
Okay.
Even in India, we are seeing a similar trend because there is a very good demand that is picking up. The momentum is very strong, growth momentum. So considering that, we feel the steel prices more or less will remain at the current levels. If not, they go up. Even if I look at today the domestic prices compared to Chinese prices on the landed cost basis, they are in the range of again 5 to 6% discount.
Okay.
If you look at Korea, it is 2 to 3%, Korea and Japan. So that is the levels at which the current domestic prices are there. If this is the context in which, if you ask me a question whether my EBITDA margin goes up in future or not, in the current financial year, our product mix is going up. So therefore, my EBITDA margin should be higher. Number two, we identified certain cost savings which are going to happen in this year. Like our coke oven plant at Dolvi is starting, 1.5 million ton. So where we are buying the coke today, vis-a-vis bought out coke, if I compare, each ton of coke I use, there is a 4,000 rupees difference between bought out coke and purchased coke. So this will get commissioned by September 2018.
Okay.
So there will be definitely a 6 months benefit on account of that, which would flow into the company. Pipe conveyor, where we are spending a lot of money on the logistics at Vijayanagar. So that is getting commissioned in this year. Similar lime plant, which we are buying earlier. So that is getting commissioned in this year.
Short point, sir, that these numbers, if everything stays the same and prices hold at current levels, then 11,500 plus on a per ton basis is absolutely sustainable, isn't it?
Qualification is only about the steel price.
All right, so a quick question on coking coal prices, the average of the last quarter, and today what are the prices?
Last quarter the average was $205. The prices are, there is volatility in the coking coal prices. Going forward, maybe short term there could be some volatility, but we don't expect a huge amount of increase in the coking coal prices going forward. A similar situation in the iron ore prices. So they will be range bound like steel prices which we are anticipating. So it will be at the current levels.
Okay, so EBITDA per ton could be also around these levels of 11,000, which is pretty strong. I mean, they've seen a 2,000 rupee quarter-on-quarter expansion in EBITDA per ton. We'll take a short break on that note, but our technical gurus will be with us on the other side. Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar to tell us how to approach the market.